Hey everyone, me Kevin here. So you've probably heard of the dangers of debt and the stock market and timing the market and how irrational the market is and how disconnected from reality is. Well, in this video, if you make it to the end, I promise I'll walk you through a new way to look at debt, timing the market, and stocks, and some things to do and some things not to do. But as is typical, YouTube usually doesn't recommend my stock videos as much. So if you appreciate this content, and I rarely ask you this, but consider sharing it and consider giving it a like, so maybe YouTube shows it a little bit more love. But in the meantime, let's get started. Here's the thing. We've heard this a million times before in almost every other YouTube video that exists, that timing the market is impossible. And I've heard that advice too. But when the market crashed and the pandemic hit, I borrowed $1.1 million to time the market anyway. And this video is the story of what happened. And yeah, I should probably come clean about a few things. Yes, Lauren and I cut my hair and it's a little on the short side. I tried wearing a fedora in this morning's video, but too many of you didn't like the fedora. And yes, this is a RuneScape coin stack next to a RuneScape pickaxe. Yeah, sorry. I'm a little bit of an addict when it comes to games, but all right, let's actually get into the content now. So first, it's helpful to know a little bit of background. I'm a 28-year-old real estate investor at heart, and I am a stock market enthusiast for fun. I actually personally love the fact that with real estate, no matter what the market is doing, I can usually buy properties for $400,000 to $450,000 in my area that are in neighborhoods that are worth between $600,000 and $700,000. That's called buying a wedge deal. To me, it's like free money. So I don't even care what the market's doing because the market can do this and I'm always just buying below it. So it doesn't matter. And the same thing can be done anywhere in the country. This is what we talk about in my investing course all the time. You hear me talk about this on the channel. It's like a broken record now. We get it, right? But I always knew there were opportunities in the stock market. I just happened to spend all my money on real estate because I knew I was buying real estate below market value. But I will say, look, with stocks, I love the fact that I could literally sit in my office, swipe on something that looks really hot, you know, like a stock, and not have to do anything. Once I decide to buy something, I can buy it, and I don't have to talk to painters or plumbers or worry about touch-up or worry about escrow or notaries or loans and all the work that goes into real estate, right? It's a grind. I get it. Like, it's totally different. It's a grind. It's like putting your head into an earnings report, and then that company loses money, and the company you didn't put your head in the earnings report on for stocks goes through the roof, like Nikola. Well, right as the pandemic hit, I had just closed escrow on a hoarder house, which one of the last popular real estate videos I did was going through that house and doing a scavenger hunt and rewarding somebody with $1,000 for whoever found the most valuable item in the property. Somebody found like a $3,000 gold watch, which was just nuts. But anyway, once the pandemic hit, I was in escrow to buy another property after the hoarder house, and we were supposed to close around the middle of March, right as the pandemic was hitting and the lockdown was happening. And I'll never forget, I'm standing in this fixer-upper that I'm supposed to close escrow on, and the world feels like it's coming to an end. It's raining outside, it's disgusting, it's the gloomiest day ever, and here I am thinking, oh my gosh, the stock market, circuit breakers have been going off, the market's coming to an end, everything's like, this is it. Like, this is worse than the recession, the great financial crisis. Like this, it's over. And you know, we just need to hunker down. Let's cancel all the deals we got going, go home and just crawl into bed. And that's when I realized something. I realized that, wait a minute, every person on YouTube and every media article, whether they're doing it or not, everybody keeps saying this quote: be fearful when people are greedy, be greedy when people are fearful. And let me tell you, I was at peak fear. I'm like Warren Buffett, looking at the airlines going, ooh, I'm out of here. That's the feeling I had. I was at peak fear. And when I was standing there in the rain, telling myself, well, I'm an essential worker, so it's okay, I'm a property manager, I'm out here at a property, and this feels like crap. I had about $400,000 of money in stocks that were rapidly losing money every day. It felt like my money was going up into flames. I think it was down into like the 250 range or something like that at that point. And it was at that point I realized, wait a minute, Kevin, I am at peak fear. Like, I could literally not be more anxious and fear-ridden about the pandemic and Lauren having asthma and my two babies, my 2-year-old and 4-year-old. We had no idea the impacts of this pandemic on children or people with asthma. Or what about my mom or my dad or my in-laws? Everything was pandemonium. And that's when I realized, wait a minute, this is hard, and it's really hard because it literally feels like I'm taking money and throwing it into a fire pit. This is the time to buy. So, as crazy as this sounds, and I'm going to, because this is gonna sound like I was gambling, I promise I'm gonna explain how I did this in a safe way. And if you stay to the end of the video, that's where you're gonna learn how I did this in a safe way. So you could protect yourself if you're ever in this situation in the future. So you can also take advantage of the same opportunity that happened here. I literally borrowed every penny I could get my hands on, which sounds dangerous, right? It's like gambling, it's like roulette. No. I'll tell you again, at the end, I will tell you why that was not gambling. The money I borrowed was not gambling. I didn't go YOLO options, okay? No, I tried to do something as safely as possible. So I'm gonna tell you in this video exactly what I bought and what I did and where we are now. And no, you don't have to get 2 free stocks with Webull. You don't have to sign up for life insurance, and you don't have to buy any of my courses with the coupon code link below. I'm literally gonna tell you right now. So here's my strategy. Borrow as much money as I could safely. And again, I'll break down how I borrowed it. And then every day the stock market was red, I would buy my favorite companies. If it was a green day, I would not buy. If it was red, it was a day to buy. And that psychologically programmed me to see red not as pain, but as, okay, today is the day I have to go shopping. So I actually psychologically changed the red signal in my mind to say, oh, it's green. Okay, not buying today. Oh, it's red. Oh, that means buy. Red means buy. Okay. So that's what I programmed myself to do, and that's all I did. Lauren and I literally cut our spending to like 0, which I mean is not very hard to do when you're on lockdown. I mean, no restaurants, no dinner dates, literally just stocks. I put every bit of money I had into stocks. And if a stock was red, I bought it. Green, didn't touch it. And so starting around March 14th, I started buying stocks like crazy. I used Chase U Invest to buy stocks instantly when I got paid, or with money that I had saved up for taxes, because taxes were due on, April 15th this year. And when they announced that they were moving back the tax deadline 90 days, I'm like, I'm gonna take all of the money I had saved up to pay my taxes and buy stocks instead, which I know is risky, but I also knew that I could always put my taxes on extension for another 8 months if I needed to. Anyway, I ended up using Webull to buy stocks before the market opened and closed, and I used Robinhood when I was waiting for money to show up at Webull, because Webull gives you more hours to trade, but Robinhood, doesn't give you as good hours, but the money shows up a little faster. And then I also used M1 Finance. There are a lot of reasons for why I used 4 different brokerages. I moved my TD Ameritrade to M1 Finance. We'll get to some of those in a moment. But I only bought companies that I really believed in. I bought companies like Tesla, Amazon, Redfin, Google, Simon Property Group, Disney, Target, AT&T, Dave & Buster's, and the Carnival and Delta stock I had, I ended up shifting into Simon Property Group, which they're all on about the same ride. But anyway, I talked about all of these things every step of the way, every buying decision I made in our Discord, which you could join the Discord for free, the public sections. There's talking about a stock group in there every day. But anyway, and of course in the live streams that we do. But every single time I got paid as well, I dumped everything I had into stocks. So I borrowed as much money as I could. I put every dollar I made into stocks, and everything I could do, I put it into stocks. I wasn't sure like, what's gonna happen with real estate? Just everything I got, put it in. Even if that meant I didn't have an emergency fund. I figured I was buying stocks so red on such a bloody day that their residual value would be enough of an emergency fund for me. Kind of like if I put 20 grand into, let's say, Tesla when it's selling for $300, that I really think it was gonna go to $150. And even if it did, I would still have a $10,000 emergency fund, right? But anyway, it kind of sucked because even though I programmed myself to buy on red days, it was hard because it's like, oh, I'm gonna buy and it's just gonna go down another 20% tomorrow. Ugh, bad. But anyway, let me show you the results and the proof of the pudding now, and then let me talk to you about debt. This right here is a spreadsheet with every single stock I own and how much I own of all of it. I'm gonna show you the individual brokerage accounts in a second, but I wanna show you this because it puts it all in one place. That way on the right, you can kind of see what percent I own. So for example, 10% of my money is in Amazon. 5% of my money is over here. I don't know, what is this? This is JP Morgan Chase, right? So it kind of gives you this little bit of a breakdown. And so this is where everything went. The biggest holdings look like they are Apple, Amazon. We've got 3.6% on Disney. Kind of wish I put more on Disney. Etsy's got about 3%. That's a more recent ad. Peloton's 5%. Simon Property Group about 12.7%. Tesla pretty over here at 32%. Pretty big portfolio there. On Tesla. Actually, I just posted on Instagram this morning that I just crossed 1,000 shares in Tesla a couple days ago, which was kind of cool. But anyway, there you go. This shows you that the total portfolio of all of this buying that I did over the last 90 days is about $3 million. And I borrowed about $1.1 million to help me buy this. After debt, that works out to having about 1.969-ish, something like that, in actual net worth from these stocks. Now, when we look at it this way, this is about the breakdown. I borrowed about 1.1. I had about 1,287 from cash reserves that I had, money for taxes that I had, prior stocks that I had, which was probably only about 250 to 300K at the time since they had lost so much value. And then any income that I was making and the money we were saving, because we just dumped everything that we had in to live as frugally as possible during a very uncertain time. And now that, in combination with the increase in market value of about $682,000 over that time, it comes to this total stock market portfolio here of about $3 million. Now, one of the things to know is, yeah, it seems like, this 682,000 here is only about 22% in gains, but I didn't put the entire 3 mil in right at, the bottom of the market, right? A lot of this buying was done over time, and some of the stocks doubled and some of the stocks didn't. Like if you go over here and you look at AT&T, 134K in AT&T. Well, AT&T's up, like 15%, right? From the bottom, Tesla's up like double. So this is, I think, I could cherry pick and go, oh, look, the Tesla stock doubled. I'm a legendary investor or whatever. But a realistic portfolio has diversity. Yeah, you know what? Did Simon Property Group basically double from my cost basis? Sure. Carnival and Delta double from cost basis? Sure. Fine. But I had moved my Delta and Carnival into Simon Property Group, so no big difference. Chase went up, maybe 30% or something like that. So this kind of shows you that the portfolio had some really big winners and some average winners. But the point is, I just kept buying and buying everything that I could. But where did I get that extra money from? Where did I get that extra 1.1 from? And why would I borrow money? Isn't that really dangerous? Well, I think in all fairness, before I actually do that, I should show you the actual accounts so you could actually see where it came from. This is the M1 Finance that has about 1.9. Remember, there's debt associated with this as well. I'm gonna explain that. But anyway, about 1.9 million here. Of which it shows that there's a $545,000 gain here, about 39%. But keep in mind, some of those Tesla shares I had beforehand. So I already did math in the background to show that during the pandemic, I was able to create about $682,000 going crazy on stocks and not on real estate. And I wanna show you how I was able to do that. And that should really help motivate you to see, okay, like that's what I need to do to prepare the next time. But anyway, let's see. These are the unrealized gains versus realized gains. So you can see Peloton's actually down $2,000 for my cost basis. But anyway, that's M1 Finance. If I add up some of the profits, which I still need to take some of these profits on options trades here on Macy's, Peloton, Dave & Buster's. If I add up those profits plus some of the profits down here and some of these miscellaneous stocks. Here we go. Tesla, JP Morgan, Simon Property Group, Disney, Amazon. This all adds up to somewhere around $86,000. So you could see that here. There's Peloton. See, Peloton over here is up actually $3,900. So about averages out on Peloton. And then I do also have money at Webull. This is what the Webull account looks like. And again, I'm just showing you this so that you quickly know that, okay, yeah, I'm not just putting these numbers on a spreadsheet. I'm actually showing you what is real. It's kind of like what I did when I did a net worth breakdown, where I showed you how I built my net worth over time from 19 years old with $9,000, how I built my net worth. The link to that video is down below. And then the last place to look is actually Chase, and I printed out a snapshot of the Chase. So remember, I had those 4 brokerage accounts, so let's hop on over to Chase. There we go, there's Chase. Again, here you could see Simon Property Group, we've got the Apple, the JP Morgan. This is all the stuff I put on the spreadsheet together for you, so that way you don't have to add it all up, but at least you could see the numbers here. And I hadn't used Chase or Robinhood or Webull or M1 Finance really before the pandemic, but I did move my TD Ameritrade stuff over to M1 Finance, and you'll see why in just a moment, but here you'll see the unrealized gains for Chase. So really, all of a sudden, I went from being this real estate heavy investor to going nuts for stocks. And so I kind of want to show you, how does investing in real estate translate to timing the market in stocks at an opportunity like this? And what did real estate do for me to create this opportunity? Well, let's get into that, because now that you have this background, let's get into the real lessons, and this is the really important stuff. So here we go. So of the $1.1 million I borrowed, about $500,000 came straight from real estate. When the Federal Reserve frantically cut rates on a Sunday, that same week, I called up my lender and instantly decided to refinance 4 of my properties. The reason I did that was because I did have fear, and I thought, okay, I would rather have a higher monthly payment on properties, but have a lot of cash that I could use to get me through the next couple years, or to buy stocks, or whatever I need to do. I just want the cash available. A lot of folks, when they hear real estate, they're like, oh, well, real estate's illiquid, like I don't want real estate. And I knew that, so I had to act fast. And when I started these refinances somewhere around March 6th, about 30 days later, I ended up with around $500,000 in available cash. And that was through a combination of these refinances and instantly drawing down on every credit line I had. I got about $300K from the refinances and about $200K from the credit lines. The beautiful thing about this kind of debt is that this is 30-year fixed rate debt and 20-year fixed rate debt on the credit lines. So I'm literally taking out a boat of cash against assets that I own, against real estate that I previously bought. Even though people are like, why would you buy real estate? You know, it's illiquid, or, oh, your equity means nothing until you sell. You know, I read all the comments, I get it. But when you look at this kind of moment, it's like, oh, crap. That's why you want real estate. That's why you want that. Because in an emergency, I go break glass, boom, 30 days later, instantly from the credit lines, here you go, Kevin. What do you want to do with it now? Yeah, now I've got higher monthly payments on those properties. But I mean, looking at what we were able to do with it is pretty incredible. And that's why, if you're ruling out real estate in your investment portfolio, you might be making a mistake. It might be a lot more liquid than you think. But anyway, and I didn't even have to sell those, right? I still own those properties, which is great. But anyway, so now I had about $500K. That costs me about 3.6%. Amortized over about 20 to 30 years is gonna cost me somewhere around $2,300, which is crazy. Just think about that. I don't pay more in taxes. I don't pay more in insurance. I just pay more money in principal and interest on that extra bit of money. And the credit lines are interest only. So the total monthly extra cost for all that's like $2,300, which, don't get me wrong, is a lot. And I hope I don't come across as like unrelatable because the numbers are big. We could do this at scale. You know, these numbers are super small compared to some billionaire, and they're super big to me when I was 19 years old with $9,000. But what you really want to take from this are the takeaways, the principles, the things that we can learn, because you could do the same thing at different scale. Anyway, so I borrowed money for about 3.6%. That cost me about $2,300 a month, and I felt comfortable with that. I felt that even if we had to cut our vacations out, and cut dinners out, whatever I had to do, I could make that payment. So I was not worried about $500,000 ever coming up to haunt me, because I was borrowing it over such a stretched out long period of time. It's kind of like buying a car and then trying to get like the 8-year loan instead of the 3-year loan, right? Your payment gets like buttered out. But I was borrowing this money not to buy an RV or a car. I was borrowing this money to invest. I was actually doing what I recommend on the channel. because a lot of people are like, oh, it's easy to make YouTube videos and just say, be fearful when people are greedy, be fearful, be greedy when people are fearful. All these quotes and stuff. It's easy to say that. It's easy to say, oh, look at me, I sold some of my Bitcoin at $19,000 and then it fell right after that, or I trimmed some of my holdings in that. Fine, but what else did you do with that money? Did you put it, is it now sitting around in cash, or did you move it to a better opportunity? Just my POV. Anyway, then I plowed money that I got and the money that I had for taxes and income that I was receiving over time. I plowed all of that money, because remember, I didn't buy it all at once. I bought literally just every single red day over time. I plowed all of that money into stocks, as much as possible into M1 Finance, because M1 Finance, and I do not want to sound like a shill for M1 Finance. You could look at the M1 Finance stocks I have by going to, metkevin.com/stocks. metkevin.com/stocks. But anyway, the cool thing that I really liked about M1 Finance is take a look at the debt that I was able to take out and how much I'm paying for it. This is crazy. Okay, here we go. So we're back at M1 Finance, and this says that I borrowed $447,000 on margin at M1 Finance. Now, margin's really scary because if stock values fall, they could do a margin call. I don't usually recommend margin, but I also know that because I have more real estate that I could refinance if I needed to, I could either sell my real estate instantly if I need to, within 30 days, right? Or I could refinance it right away and I could pay this margin off right away. So I usually don't recommend margin unless you have other ways of paying that money off right away. But look at the interest rate on that. The interest rate is 2%. I'm literally borrowing money at 2% to go make money in the stock market during the craziest pandemic ever. That's insane. That's like literally free money. That's like the cost of inflation. It's like, how could you not? Now, I don't like maxing things out. I like keeping my total debt on stocks under 20%, certainly not more than 30%, which is one of the reasons I don't love Webull and Robinhood's margin loans because, well, first of all, they cost you more money. They cost you like 6%. And maybe it's like 5%, 5 to 6%. And they let you borrow up to 100% of your account value, which is way too much borrowing. Not very good. Now, I have borrowed a little bit on margin at Webull and Robinhood, but those are the first that I'm going to pay off. So all in all, I borrowed about $542,000, probably with an average interest rate around 2.8%. It's interest only, so that costs me about $1,264 per month. So when I combine that, I'm paying a total of somewhere around $3,500 per month to have $1.1 million. $1.1 million, I didn't say that right. I'm paying $3,500 a month to play with $1.1 million during the craziest stock market insanity crash period ever that I've certainly experienced. And I was able to do that because I owned these other assets, mostly real estate. And so because I timed the market against the advice that literally everybody says, everybody's like, no, don't time the market. Because I timed the market and basically now have $3 million stuck in stocks, I was able to make $682,000 in gains if I sold today. I don't have any plans of selling. The only reason I would sell is if I had another opportunity to go into, right? I mentioned that earlier. Like, if I had like a real estate deal coming up, I will gladly sell. Like, I think the first one I'm going to sell is Simon Property Group. But I'm not going to sell anything until I have another opportunity to go into. That's the only reason I'm really going to sell something and not like transfer it or lateral it into something similar. So now you've really we've got some lessons here, and I want to give you the bottom lines here, right? Gosh, I just worry that, like, I don't want to sound like somebody who's just trying to pat myself on the back, and again, I know it's easy to say, oh, well, over the last 20 days, I doubled my money investing in Nikola. Fine, like, great. I'm just showing you a real portfolio and with how I was able to move a lot of money in, right? And I don't want to sound, also, this is the bigger thing, I don't want to sound unrelatable. I want, hopefully, I'm doing this correctly. I just want to inspire you to show you that, if you saw my net worth story, you could go from $9,000 to a millionaire. You can make it happen in this country. But you have to own assets. You have to own stocks and real estate to be able to move when opportunities hit. I can't have a pandemic hit and then go, okay, let me go just work really hard and make money to buy. You're not gonna be able to buy much. You gotta own stuff like real estate or other stocks. So here's the thing. Rule number one. First, you know how Warren Buffett says, he's the guy with the quote, be fearful when people are greedy, be greedy when people are fearful. I'm like so sick of the quote, right? Well, Warren Buffett, and like, I don't want to slam the guy because I love the guy, but he was fearful with the airlines, right? And too many of us were fearful to buy. I was fearful to buy too. But I just thought to myself, when you have that scared feeling, you're probably in the right place. That's rule number one. Number two, it's when stocks go up 100%, like Nikola did in a day, that you start feeling safe and you buy when it's really, really green, that usually you're in danger. And you're also in danger if you do short-term bets, right? Short-term loans, short-term financing, short-term option trades. Those are massively volatile, very, very dangerous. Notice I could have, if I did some short-term options trading, oh yeah, I could Monday morning quarterback and show way more gains, right? But this to me is safe. This was a very safe move. And now what I'm doing, and I mentioned this last week, is I'm just paying off the margin. Like I'm paying off the Robinhood margin, I'm paying off the M1, or not the M1, that's the last one I'm gonna pay off because it's 2%. Paying off the Robinhood, paying off the Webull, paying off the home equity lines of credit because they're like 5% or something like that. And then I'll pay off the M1 finance. That way, if there's a double dip, I'll have less debt, but that debt will be available again. I could turn the debt switch on again. I have that flexibility to buy when I feel the timing is right, when there's fear. So number three, keep the debt low. Your debt low, under 20% for stocks, in my opinion. Unless, of course, you have real estate to back you. And so number four, buy real estate below market value. So you have these opportunities the next time. You know my courses teach you how to do this. We got people buying deals every day with this knowledge. And then number five, only sell when you have another opportunity. It does nothing to say, oh, look at me, I sold at the top. No, I'm the best market timer ever. No, I really think the best timing is when you buy at the right time and then you just hold. I really like that. And number six, stay away from short-term debt. So there you go, folks. Let me know what you think about this. If you like this kind of content and you want more content on stocks and the way that I look at the market and the way that I put my money where my mouth is, I can't even say that right because it's weird. Please subscribe. Let me know in the comments down below. I really appreciate you watching this, and I really hope that this video inspired you. I really, really, really hope that somebody doesn't come into the video, which is gonna happen, click around and go, oh, this is the dude just trying to brag or whatever, and then I guess that would just be a disservice to them, because I really think this information is valuable, and I hope it was valuable to you. So thank you so much for watching, being part of the community, and folks, we'll see you next time.